My name is Pamela Regier, and I'm going to be looking at some charts for you in the foreign exchange market, showing you what and how to understand this market. Right here we have a downtrend going on in this market here, and a downtrend, obviously the market's going down. The market only moves three ways, technically only two ways, up and down, but then you have a consolidated area where a lot of traders tend to get stuck in there. But here at I Am Mastery Academy, we teach people to stay out of those areas and how to identify if an area like that is going to happen. So we're going to dive right into this, and I'm going to just point out a few structure areas, some data points, and maybe we'll go into some levels here for you guys as well. So we're looking at the pair EUR-NZD, which is the euro and the New Zealand dollar, and we're on the 4-hour time frame. So each one of these candles, here, let's zoom in here, I'll show you what I mean by candles here. Oh, you can see that there's each of these candles. So each one of those candles is 4 hours long. Excuse me. And when you get access to some of this education here, it's going to allow you to understand what you need to be looking for. You know, some people go and they try to do something like this, and they don't understand, and they lose their money constantly, right? So with the proper education, it teaches you how to really forecast which way the market is going to go. And how we usually do that is by identifying certain points in the dated areas, right? And what I mean by that is, let's just take a look here. I'll show you. See how they all come up to peaks, right? This is still our data, or our down trend that's happening on over here. But if you look, we have these peaks happening. I call them waves, but sometimes they will form M's and W's, right? And when you see these, they're usually an indicator telling you which way the market is going to go. Because it's a reversal pattern, usually you'll find them at these pointed areas, right? Whether the market's in a downtrend or whether the market is in an uptrend. Continuation patterns. I got this stuff written down in the book, but I don't have my book in front of me. See here, we have a W at the very bottom of this downtrend. It started to form. And then look, it went all the way up to there. Let's see how much that would have been. It's going up there. Let's cancel this out here. I'll take in mind that's 4 hours. So you've been holding this 4-hour candles. So you would have been in this trade for 13 days, 8 hours. bringing in 507 pips. That's unbelievable. You know, a lot of people can't even get that type of money in their job. Depending on your risk management, that could set anybody financially free. 507 pips? Oh yeah, easily. So, as a day trader, we're looking for these W's and M's, right? Because this W told us that this market was going up, and look what it did. It clearly did go up. Now for our M's, let's see if I can find an M here. Let's just, I'm still on the, let's get off of that here. Okay. Let's see if I can find an M here for you guys, just to show you. As you can see, I did some work on this. Look at these W's. It went up again. Hasn't been an M in this pattern for a while. It looks like just a bunch of W's. Oh, hold on. See, if you look, it's a little sloppy, but it still is a double top, and it went down. It formed this kind of triple bottom a little bit here, and then went back up. But you can clearly tell, if you can identify these W's and these M's, that alone can bring in a lot of profits for you. And when you're risking $1 at 500 pips, that's a $500 trade. One trade. Now, can you imagine if you placed 4 of those a day? 4 $500 trades. Nobody makes $2,000 in a day at a 9 to 5. Nobody does. This type of stuff, people have fired their bosses over. And this information is available to anybody for less than $300. Ask me how today.